Hey, what's up, everybody? Welcome to Market Misfits. In these first videos, we're going to be covering the fundamentals of the cryptocurrency market, why prices behave the way that they do. So we're going to first be getting into the Bitcoin halving. A lot of people see this as the most influential event for the price for the bull run, and then so after this, we're going to be looking at market cycles. So and we're going to be looking at market sentiment, but that's going to be on the next videos. Let's cover this and we'll get on to the next one. Just real quick, none of this is financial advice. We're sharing what we know as the fundamentals so that you will be able to have basically a baseline or foundation of understanding to build on. So we suggest everyone to do their own research. Let's get into this. Bitcoin halvings are a fundamental aspect of the cryptocurrency's design, serving both economic and security purposes. Here's an example of the reasons for Bitcoin's halvings. Number one, supply control. Bitcoin has a capped supply of 21 million coins. Halvings ensure that the new Bitcoins are gradually introduced into circulation, slowing down the rate at which the new coins are created. Every 210,000 blocks, approximately 4 years, the reward that miners receive for validating transactions and adding new blocks to the blockchain is halved. It's the word halving. This reduction in the reward decreases the rate at which new Bitcoins are mined, controlling the overall supply. Number two, economic incentives. By reducing the rate of new coin creation, halvings impact the economic incentives for miners. When the reward is halved, miners need to put in the same computational efforts to mine a block, but they receive fewer Bitcoins as a reward. This scarcity increases the value of existing Bitcoins and is intended to create a deflationary economic model. So basically, as we're going, what they're saying is that they're giving less incentive to miners to to create more. So not only is it going to be capped, but this is one of the driving reasons why people are coming into Bitcoin and into the cryptocurrency market because of this. Number three, market impact. Halvings can influence the market dynamics and investor sentiment. Historical data suggests that leading up to and following a halving, there can be increased price volatility. The anticipation of reduced supply often leads to heightened interest and speculation in the market. Number four, security and stability. Bitcoin's security model relies on miners actively participating in the network. By controlling the rate of new coin creation, halvings help ensure that miners are economically motivated to continue securing the network. This economic incentive is crucial for maintaining the decentralized and secure nature of the Bitcoin blockchain. Number five, decentralization. Bitcoin's decentralized nature is a key aspect of its design philosophy. The gradual reduction in mining rewards over time prevents the sudden influx of new Bitcoins, which could potentially disrupt the ecosystem. This controlled issuance supports the goal of a decentralized and widely distributed network. In summary, Bitcoin's halvings are integral to the cryptocurrency's economic model, influencing its supply, market dynamics, security, and decentralization. They contribute to the long-term sustainability of the Bitcoin network and play a role in shaping its economic ecosystem. So we have the next halving coming up. Let's take this off real quick and we're going to look at the chart really fast. So we have an indicator pulled up here for the cycles. But these yellow lines right here, these are when the previous halvings were. So the first one was here, 26th November 2012. It was right here. You see, price was already kind of going up here. Saw some consolidation moving sideways. So we're going to go over these different types of market structure and cycles in the following videos, but we're just going to stick to the Bitcoin halving and kind of just look at these charts to see how it coincided with a price rise or bull run. So you can see the price was already going up. We had the halving and then we went nearly straight up there. So price had been going up just a little bit here before it hit the one. July 4th, 2016 was the next one. And then we saw a gradual, kind of like a more gradual increase here. on over to the 11th of May, 2020. We had just seen a pretty big dip here, actually. Blow this up a little bit. We see a pretty big sell-off right here. So right after the halving, kind of a little pause here. This is a weekly time frame, by the way. So each one of these candles is a week, represents a week of price action, buying and selling. So here went up. So the next projected one is going to be somewhere, they're saying mid-April 2024. So we put it right there, 2029. So, or 2029, April 2029. So this would be towards the end of the month. So just looking at this way, from halving to halving, let's take out real fast measuring stick. We're just going to go from halving to halving. So the first to the second, we're looking at 1,316 days. And then from this one to this one, we're looking at basically 1,400. We're going to go from this one. Let's go over here. Actually, let's do this. We'll copy this one. Let's see if we get a direct hit. So there's no precise date for the halving. That's the end of April. This is showing, closer towards the end of March here. So again, it's not exact. It's not an exact science, I guess you would say, science or math, whatever. But this is to give you roundabout, roundabout. So having a long-term perspective is really important. While in this market, we do day trading, which is a short-term investment. But one of the main reasons that we're going and doing this and covering this in the group is because I know that there's a lot of people that will be here that are new or coming in that are new, or maybe you're not new. Maybe you've been in for a year or two. Like me, I didn't start looking into the halving and stuff like that until 3 years into trading. So but again, I was a short-term trader, really didn't, trade the crypto market too much, but it's not uncommon for someone to be into the markets or into crypto and not know about this stuff. So just wanted to cover it here at the beginning. So just looking at this is pretty close, but this gives you an understanding of, or hopefully this is the goal. Another one of the reasons why we decided to do this and put this at the beginning is because a lot of people will FOMO in from the news. Maybe they heard about, cryptos or whatever before down here when the prices were lower. And then as they picked up, they're starting to get regret. So we're also going to be covering the psychology of market cycles. But anyway, so you start to get regret, or, you start to get FOMO, fear of missing out, basically, is long and short of it, what this is. And by the time it's blasted all over mainstream media, people buy here, and we don't see another top for roughly 4 years. So we don't start to go up until the halving here. So until it's next time big on the news, we're looking at nearly 1,500 days right there. So, I know I hear people all the time that just jump into this blindly. We cannot give financial advice on here. We're not financial advisors, but we are experienced enough to, hopefully help some people that are newer right off the back. And so that's the goal. We want to save you time, and help you to be, more educated so that you can make better investment decisions and know what to know, and mainly know what to expect. So to help you get some better expectations, because I know that there's a lot of people that, push people to get in, influencers and things, and even the news for that matter, it's the way that it's designed. And so just want to give like some realistic expectations here, not anything that's absolute, but, again, just something that's in general fundamental, that's been consistent throughout history so that you can have, not be as disappointed, or not feel as left out because, you know, to where we're heading, possibly, we may not even be a quarter of the way up. We'll just have to wait and see. But anyways, guys, that's gonna do it for this one. On the next videos, we're going to be covering the market cycles, and we're going to be taking a look at the psychology of market cycles and then touching a little bit on market structure. But that's going to do it for this one, and we'll see y'all on the next one. See ya.